For those of you who are freaking out about the recent price movements of Bitcoin, please watch this video. It's going to arm you with a lot of information that's going to make you a better investor in this cryptocurrency space. If you want to know what we're doing with our cryptocurrencies, and if you want to join the thousands of other people who have joined the CT Club, they get access to our portfolio, our trade alerts, our market updates, insights on what we think is happening on the cryptocurrency space, and how we are investing to best capitalize on that. You have to check out a link to the CT Club. It's down below in the video description. For those of you who take a lot of comfort in numbers and in patterns and in historical data, here's some numbers for you on what to expect in this coming month of September for Bitcoin. First of all, September is historically usually ends in the negative. Usually it ends at a lower price than where it started. In fact, 8 out of the 10 last Septembers, this was the case. And the average downside is usually 7 to 13%. So pretty small percentage, and yet again, evidence of an accumulation phase. So let's get into the topic of today's video. An accumulation phase or a consolidation phase is classically boring. It's when we see sideways trending of the price of Bitcoin. There's a range that it bounces like a ping pong ball between. The past, 9 months, it's ranged between $20,000 and $30,000 per Bitcoin. Now, for those of you where these recent price movements in Bitcoin are making you nervous, know this, that accumulation phases are when institutional investors and smart traders are slowly accumulating their position in solid cryptocurrency projects, especially Bitcoin. And why are they buying in this time? Because history has proven itself time and again that these accumulation phases have proven to be the time of maximum financial benefit. The prospect of reward at this time far outweighs any risk of downside. But believe it or not everyone likes an accumulation phase, and you can spot them pretty quick based on what type of a trader or investor they are. Basically, long-term holders, they love accumulation phases because they don't sweat the small stuff. They are not looking at anything short-sighted. They have their focus on the long term, the long game. But day traders or people who do short-term trades typically aren't a fan of accumulation phases. In fact, if you've been noticing that there's a mixture between bullishness and bearishness depending on who you're listening to in this space, that's the main difference. Those who are bullish because they have a long-term perspective, and those who are bearish are worried that Bitcoin might crash another 5% by the end of this month. Another classic sign that we're in an accumulation phase is a drop-off in trading volume. And if you look at after March of this year, trading volume just fell off a cliff. And this basically means less people are interested in it. It's not hyped so much anymore. There's less people trading in the market. Don't forget about time. Accumulation phases can often last for several months. In fact, for Bitcoin, it's typically about a year. And if you know anything about the last low of Bitcoin was in November, so time's a ticking for this accumulation phase to be wrapping up and for new highs to be incoming very soon, hopefully. This is not a crystal ball, you guys, but this is the pattern overall of Bitcoin that we've seen the 4-year cycle. But there is a more social evidence of being in an accumulation phase that I think all of us can relate to at this point. And that is that good news does not do much to budge the price, and similarly, bad news doesn't do much to budge the price either. And for those of you who are still around, we've survived the bear market, we've survived low after low after low after low, and now nearly a year of really boring, relatively boring price action. When you hear good news, you want it to be reflected in the price. Your hopes go up, but the price doesn't. People are just sick of the bad news. They're sick of seeing the lower prices. And when the good news comes and the prices don't go up, it's just another example of, wow, why am I in crypto at this point? This is the phrase that comes in. It's always darkest before the dawn. So do not forget that. Now tell me, Does any of this sound familiar to you? If it does, let this be your hint to explore the option of dollar cost averaging. Go ahead and search that term, learn how to do it. You basically set a stress-free budget for yourself with the frequency of buying and accumulating a coin of your choice. This is not financial advice, it's just something for you to look into if you are interested in that. But what that does, it allows you to accumulate a position which you will thank yourself for in the future when the bull market does start popping off, and you can actually enjoy it by taking profits. So you might be wondering, well, if good news isn't going to get the cryptocurrency market out of the accumulation phase, what will? Well, if you want to know the answer to that question, make sure you hit subscribe and hit like on this channel as well. We always appreciate that, but hit subscribe so you get notified when that video comes out next week. I highly recommend it. I'll see you tomorrow. Bye, guys.